Okay, and welcome back, students who are taking financial accounting and working on the Chapter 4 exercise Group B problems, exercises, and we are picking up with problem 34, right? We're using the same data from exercise 4-32, but whereas 4-32 and 4-33 were about creating the income statement, 4-34 here is, we're going to create a classified balance sheet, okay, from this information. Now, before I go any further, creating these here statements, we've done this back in chapters 2 and chapters 3. So if you're not getting this, this is basically an application part. You should be able to work through this information and create your own financial statements by now. But if not, go back to chapter 2 and chapter 3 to be able to understand the theory behind creating the financial statements. And if you still don't understand the theory, then obviously contact an instructor. So I'm not going to go through a lot of the theory in working through this problem. I'm just going to try to create a balance sheet. My thought process in creating it, like I said, is you can see that in chapters 2 and 3. Also realize that this here is a classified balance sheet, and remember, I've explained this in one of the other videos too, that classified means that this information can be passed along. This financial statement can be passed along to someone outside of the company. If you create your financial statements and they stay in-house and they're never intended to leave the company, it doesn't matter whether they're right or wrong. You're creating them for management of your own business. But as soon as you decide to have that financial information go outside of the company, the financial statements have to be classified, and that classified represents, that this information is accurate, 100% accurate. And if it's not, you open yourself up to legal liabilities because the third parties, your bankers, investors, so on and so forth, they're making financial decisions based upon your classified information. All right, so it has to be accurate. And so I'm not going to flip back and forth in between these here slides. I'm going to, be looking at the information from the textbook. All right, so I'm actually flipping open to that particular problem. There it is, and I will be looking in the textbook at this information and creating the balance sheet so that I don't have to be going back and forth between the slides. Right? So, and of course, I'm also going to take liberties in my formatting here. Now, realize that this is classified and this should be perfect, but then again, I'm not typing this up in a Word document on a screen and formatting it perfectly. You want to see correct, perfect formatting, go ahead and look at the solution. Here, I want to get this done. I don't want to spend an inordinate amount of time, so I'm going to take liberties, as I always do, with creating my financial statements. So, this is for board and furniture. When I say take liberties, I'm going to, abbreviate. I'm going to try to keep the format as much as possible, but I'm not concerning myself with, writing things out, capitalization, I'll abbreviate that type of stuff. But for the most part, the formatting, you should be able to see it. I'm going to put like dollar signs, underlines, double underlines, put the columns in the right spot, that type of thing. But when it comes to actually writing this stuff out, I'm going to use a lot of abbreviations. This is not an income statement. This is a balance sheet. All right, so balance sheet. And with the balance sheet, remember, it is, you can either go as of the specific date. In this case here, it's August 31st, 2014. I like to write the words as of, but if you just put the date itself, that's acceptable, right? And remember, I always start out, I have a process. I go through the same process again and again and again, all right? And if you've watched the theory videos for chapters 2 and 3, you see my explanation of that. So I start out with the heading, and that's indented. Then I will put, I'll write, I like to go in the horizontal format, going like this when I present my information instead of the straight up and down. Right? Even though you can do it both ways, either way's fine, but kind of like stick to one way, and that's based upon how the business has their financial statements in the past. All right, you don't want to be going one way and then the other and flipping back and forth. You want to keep them all consistently the same. If the previous financial statements are listed in the horizontal format, you keep it in the horizontal format. If they're listed in a vertical format, do them in a vertical format. But you'll find that in my experience, it's 50-50. All right. It's not a matter of, oh, the vast majority do it like I'm going to present it here. All right, it just all depends upon the business. So the second thing I do is I put right in the categories. Then under the categories, I am going to start listing the accounts. Now, when in chapters 2 and 3 we work with very simplistic financial statements, but this is a growing process. As you get more and more information and you gain more knowledge in financial accounting, the basic formatting that you learned in chapters 2 and 3, starts to expand. Okay, and part of the expansion here is the consideration of current versus long term. Okay, all right. And what I mean by that is that you're going to now have a tendency to start to break down your assets into current assets and your longer term assets, and the same thing with your liabilities. You're going to break them down into current liabilities and long-term liabilities. All right. So we're going to format and present the information in that respect. So I have my category assets, and then I'll list current assets. And now the long-term assets are property, plant, and equipment. And whenever you see, and this is just as an FYI, PPE, all right, is the shortcut to writing out property, plant, and equipment whenever we're discussing it. But on your financial statement, you'll actually write out property, plant, and equipment. Now, as an aside, as I glance at the solution, the authors are using long-term assets, and honestly, you'll never see long-term assets. It'll always be current assets and then property, plant, and equipment. Okay, so even though they're using long-term assets there, realize that the way I'm doing it, this is perfectly acceptable, and most often that's the way it's going to be, because property is things like land and buildings. Your longer term, plant being, if you have a really, really big building, equipment, long-term equipment, like printing presses or something like that. It's not your short-term computers and furnitures and stuff like that. All of that stuff goes under current. Okay. All right. So, and that's why they also call it property, plant, and equipment. All right. Instead of just long-term, so that you have a little bit better of a designation as to what is long-term, okay, versus what is your current. So we're going to break down our assets from into current and long-term, and we're going to do the same thing for our liabilities. We're going to have current liabilities, okay, and on the liability side, you may have long-term liabilities, okay, and they do call it long-term. They don't name it something else like the assets with property, plant, equipment. So you have current liabilities and you have long-term liabilities. Now, if you only had current liabilities, like let's say for example, a long-term liability would be mortgage payable. Okay, accounts payable and notes payable are a current liability, and if all you have is just current liabilities and you don't have any long-term liabilities, then you wouldn't put current or long-term. You would just list your liabilities, and it's understood that they're just your current liabilities. But in this case here, we have both. Okay, all right, so underneath our assets, we're going to list our current assets and indent. So I have cash, and I have an accounts receivable, and I have inventory, and I have prepaid rent, and I have supplies. Now, due to space here, I'm going to erase this, and I'm just going to write this as PPE. But remember, you would actually write out the whole thing, but I need space in order to make my columns. So, and again, I'm working with, I'm not, for me, this is not classified. This is for me just to be able to create the balance sheet and understanding, that I am, why I'm doing what I'm doing, even though I'm deviating from a perfect classified balance sheet. So I have supplies, and then I'll have my total current assets. Right, so this is going to be a mathematical calculation, so I'm going to end up using two columns. So I have 11,600 for cash, receivables is 6,300. Let's see, inventory is 8,300. Prepaid rent was 1,900, and supplies was 2,400. And that gives me a total current assets of 30,500. Okay, so I'm using two columns, and of course I put a $sign as the first number in the column, and I use the underline showing the mathematical calculation. So now I have property, plant, and equipment. So these are all my long-term assets. So I have equipment, and of course less accumulated depreciation, equipment, and then I have a building. And less the accumulated depreciation, building. Okay, now remember that when we have an asset and we're depreciating it, when we buy the asset, we list it, okay, at what we purchase it for, and then we're showing our accumulated depreciation. And when we take the asset less the accumulated depreciation, that gives us our book value. All right, so we're presenting three pieces of information on our balance sheet in order to look at. Our equipment is 32,000. And our accumulated depreciation is 12,700. Okay, and notice I didn't make that a minus, and that's because I'm by describing it as less, I know that I'm going to subtract 12,700 from the 32,000, and we put that figure right here at 19,300, right next to it. We don't have a separate line that says the book value of equipment, okay, is 19,300. Generally accepted accounting principles, we have we have the asset less the depreciation, and we put the total amount in the right-hand column. Okay, so we're doing the math and we're just putting it over. Same with the building here. We're going to show the building at 155,000 and the depreciation at 38,700. And we're putting that on the same line as the less accumulated depreciation, which is 116,300. Okay, so that gives us, in this case here, we're just going to go and we're going to call it total assets. Draw an underline because we're going to do a mathematical calculation in this column. Okay, in order to get $166,100 as my total assets. Now, I'm going to erase a little bit here, and I showed that for the simple reason that, as you can see, I'm having a problem with the, with space here, okay? So, this is perfectly fine. However, I would have a tendency, okay, to have done it this way. Okay. Here, I would have my total property, plant, and equipment, okay, which would then be in this column, and that would be what, 635,600, okay? Because why? I'm doing the math in this column to get that number there. So I have a third column here, okay? In order to have my total property, plant, and equipment. So I know what that is as a total. And that will now force me to move this information over and this information over so that the 30,500 is in the same column here. All right, so let me erase that and move this information over. So I have a $sign there, and I have a $sign here, and I have a $sign here, and my cash is going to be 11,600, 6,300, 8,300, 1,900, and the supplies is 2,400. Draw my underline, and so my total current assets, goes right there. So now notice what I'm doing, okay? It's one thing to be able to just look at a previous financial statement and follow the format exactly the way that is, and that's fine, okay? But notice what I'm doing here is I'm creating a new financial statement, okay? I'm rearranging this information, all right? I'm not doing it like it shows in the solution. So what you're seeing me do is actually create the financial statement from scratch. And as you can see, I'm having to adjust, okay? I start out with this basic premise, and you just saw me go and say, okay, well, right now I have 3 columns, okay? And the reason why is because now my total assets are the sum of these two numbers, 166,100, okay? Whereas if I didn't make this adjustment here to put in the total property, plant, and equipment, I'd only have 2 columns. So basically what I'm getting at is you're watching me real time figure out how to, to go about putting the information on the balance sheet, and how I'm making the different adjustments in order to be able to get all the information correctly on the balance sheet and the formatting, correctly. And of course, I'm going to do the same thing here with my indentations and things like that. But the main thing I wanted to point out is that, yeah, I had these numbers here, but due to wanting to include the total property, plant, and equipment, I have to actually shift these numbers over because I want to be able to have my total current assets add it to my property, plant, and equipment in order to get my total assets here. All right. Whereas before, you saw I had my my total assets plus my book value for equipment and my book value for the building. Right. That leaves a little bit of ambiguity. And so therefore, I would prefer to create the financial statement in this manner. So this is what my asset side would look like. Okay. Now, obviously, I don't have enough space here due to my handwriting and stuff. So what I'm going to do is I am actually going to, pause and copy this down if you need to. All right. This is the way I would do the asset side of this financial statement. And to make things a little bit more presentable, I'm going to erase now and go back to what we had before. right? In other words, I'm going to take out the total property, plant, and equipment here, and I'm going to put this information back. And so this here was 6,300, 8,300, 1,900, and 2,400. And I'm going to have the 30,500. And then so my total assets are 166,100 here. Okay, so this is what is showing as part of the solution in the textbook, with of course some minor variations. Realize that I wouldn't be doing it like this. My asset side would have looked like what I just had previously, right? It's, is this technically wrong? No, it isn't technically wrong, but is it preferable? No, it isn't preferable. Right, so I have current liabilities here, and under my current liabilities, I'm going to have accounts payable, salaries payable, and unearned revenue. And that's going to give me a total current liability. Okay, and so I'm going to use two columns here. So actually I'm going to use three columns. And again, I'm disagreeing with the book. Okay, for the simple reason in this column here, all I want to have is liabilities plus my equity, right? In order to get my, my total liabilities and equity, right? So I want to be able to do, have my current liability number and my long-term liability number to add up to get this liability here, my total liabilities here. So when I'm looking, if I have a current liability here, let me erase that a little bit. If I want to have a current liability here, then I have to do the math in this column in order to get that current liability. So you can see the framework that I'm working from. And it's the same thing that I did over here with assets and I actually didn't explain it in this manner. But basically I'm sitting here and I'm saying, okay, in this column here, I want liabilities and equity. Okay, fine. Well, what makes up my liability? Well, to make up my liability, I have current and I have a long term, right? All right, so those two have to add up to be able to go over here. Now for the current, what is it that I have in figures here that I have to add up so that I can write the number right here? And the same thing with long term. What numbers am I going to write here so that when I add them up, I can write them here? Okay, so I end up having to use three columns for my liabilities, right? And that's kind of what went, I didn't work through it the same exact way as I did over here in the assets. As you saw, I presented information and I had to fudge and move. If I were doing this from scratch, this is how I would have, by saying liabilities here, current, long-term here, and then whatever numbers here to get these. That's my thought process if I'm creating from scratch, okay? And that's how I would, I'd save myself the trouble of, having to rewrite numbers all over the place. So I have 5,100 here. I have 2,600 here. And I have 3,100, which gives me my total current liabilities of 10,800. And then I have my long-term liabilities here. Okay, and in this case here, I have a note payable, and I have a mortgage payable. And this is going to be the same thing. I have 60,000. Oops. I have 60,000 here. Excuse me. And 21,500 here. And that's going to be my total long-term liabilities, which gives me 81,500 here. And that's a mathematical calculation, so I have to show the underline. So then I have my total liabilities here, and that's going to be a number in that column, so I have 92,300. Okay, so that's how I would do the liability section of my balance sheet. Notice it does look different from what is in the textbook, okay, in the solution, I'm sorry, in the solution manual. And so then I have my heading for stockholders equity. And for my stockholders equity, I'm basically just adding the two numbers together. All right, so I have common stock and I have retained earnings. And since that goes in the second column, this middle column here, that's 15,000 and 58,800. And so my total stockholders equity is 73,800. And that's going to get an underline in this column because now we have our total liabilities plus stockholders equity, and that's going to be the $166,100, and that gets a double underline because it's the end of the calculation. And so that's what the stockholders equity section looks like for this balance sheet. Okay, and you can see how, I mean, sure, this looks a lot of scribbledy and everything like this, and if I type it up, this looks much more presentable. Okay, but we're talking about flow here. Okay, and there's a reason why I went back and did this only two columns here, because then this way I can, I'm going to show the way your eye flows. When you're looking at your assets here, if you're only using the two columns versus the three columns, which I had created, what ends up happening is you end up, your eye, goes down and says, okay, I read this down and I understand that that's that number. And okay, I understand that this number and this number give me this number, and this number and this number gives me this number. But if I want to, I realize that, I have my current assets, and I have to add my property, plant, and equipment. Well, notice you don't have a number here that says what your total property, plant, and equipment is. Okay, you're going down. You're going to have to, if you're doing analysis, you just want to be able to pick out that information. You don't have a total property, plant, and equipment. What's that amount? I don't know. So now I have to actually figure something out, and that's an extra step I have to do in my analysis, and you don't want to be doing that on your financial statements. Yeah, is this information technically correct? Yes. But, is it user-friendly? Well, not as well as it possibly can be. Over here on this liability side and, your equity side, is this information user-friendly? Yes, because, I can look down at my current assets. I mean, I know what those accounts are. I can add them up, and I don't have to add them up because the amount is given to me right here. And the same thing with my long-term liabilities. They're presented, and the total amount is given here. And I don't have to mentally, figure out how much my total liability is here because it's already being presented. I don't have to do that extra step in the math. And then when I come down to the equity section, there's my equity accounts, and there's my equity, total equity, so I don't have to do the math there. And I don't have to do the math when I add those two together in order to get my, accounting equation to balance from here to here. See, on this side here, I didn't have to do any additional math off page in order to be able to get the information that I need to. Over here, yes, I do. Okay, so is doing it this way user friendly? Not as much as it is, on this side. This is user friendly as it is on this side? This side, no, it's not as user friendly. On this side, it is user friendly. Okay, and so that's why I present the information the way it is. All right, so let's see here. Okay, let's see. So I'm going to jump back up here to the problem, and it says here the balance for retained earnings showing represents the balance prior to closing the temporary accounts for the year. All right, so for this retained earnings over here, that information, oops, green. That information here, this 58,000, can be calculated from the previous retained earnings. Let's see, where is it over here? Okay, here's my retained earnings of 56,000. All right, and then from exercise 4-32, I know I get my profit or loss on my income statement, and I also have dividends that I have to take into consideration. Okay, so whatever the profit and loss was there, and knowing that I have to close that out to retained earnings, I consider this dividend account also, and that's going to adjust my retained earnings. In this case, it adjusted it by $2,800 because we said that the retained earnings is 58,800. All right, so that's how I arrived at my retained earnings amount. I had a beginning balance of 56. I added in my net income of 68,000. All right, so that's net income of 68,000, right, which gave me 124,000. And then I'm taking out the $65,200 for the dividends. Okay, and that means my retained earnings ended up being $58,800. Okay, and that's the number I'm using here on the financials on the balance sheet. Okay, all right, so that's this problem. I know that there's a lot here, and I am 31 minutes, almost 32 minutes into this video, and I try not to take so long with videos because it's like you'll never get through the entire textbook. But I think it's what I've presented here is important, and if you didn't understand it, pause the video, go back and watch it again, see the differences between what I've presented and what you're getting in the solution manual, understand those differences, and then this way that'll broaden your knowledge base for going forward in order to be able to make the correct decisions when it comes time. And if you have any additional questions, feel free to telephone and speak with an instructor. They'll help you out. Yes, you notice that this is cumulative. I had referred to chapter 2 and 3 in creating your financial statements, but notice that the financial statements are getting more complicated. Okay, that's because it's cumulative. We're adding on to what we already know, and we're expanding our thinking about the information. So understand, what's here, and if not, watch the video again, and if you're still not getting it, contact an instructor. Right, and I'll see you in the next video for that problem 4-35, and that should be a relatively short one. All right, see you then.